In recent years, something almost unimaginable has been unfolding in America's insurance market. After decades of stability, insurers are retreating, county by county, from places long deemed safe. A new Senate report warns that private insurers are pulling out of high-risk states like Florida, California, and North Carolina. Data visualization experts know this trend has spread beyond California and Florida into Alabama, Mississippi, and the Carolinas. In other words, areas that were once magnets for new homeowners are now facing an exodus of coverage. In the next few minutes, we'll count down the 10 U.S. counties where this silent retreat is already happening, each story more ominous than the last. The worst is yet to come at number 1. Now let's begin our countdown. 10. Wake County, North Carolina. Wake County's Research Triangle once felt like American sunshine, a booming tech hub near Raleigh with low taxes and no storms in sight. Insurers love this county for its prosperity and predictability, but recently the math has changed. Climate stress and costly storms are creeping into insurance-friendly North Carolina, and Wake County is feeling the pressure. Industry data now show Wake and neighboring Mecklenburg County rank among the states most impacted, with home insurance non-renewal rates above 3%. In practice, that means policies are quietly being canceled. This tech-savvy county is seeing a ripple effect. Families who moved here for steady jobs are now opening letters telling them their insurer won't renew their home policy. Once lower risk than anywhere on the coast, Wake County is suddenly on notice. The warning signs are in the fine print. Even here, the era of cheap, easy insurance may be ending. 9. Lynn County, Iowa. Far from coasts and hurricanes, Lynn County, home to Cedar Rapids, was never the first place you'd expect an insurance panic. For decades, insurers treated Iowa as the heart of safe, affordable living. Rolling farmland, stable taxes, no wildfires. But that illusion cracked quietly. In Cedar Rapids, one local landlord saw every insurer leave the state, canceling his policy on 17 rental units. After months of searching, he found no replacement. Without insurance, he says a single disaster could mean bankruptcy for his business. Residents here remember Iowa as steady ground, but the numbers aren't steady. As other states tighten their wallets, even Midwestern homes are being counted out. The hidden trigger? A history of severe wind and hail events, once anomalies, now routine, has made insurers rethink risk even in the heartland. Now homeowners in Lynn County are scrambling to find coverage or facing the unthinkable. No insurer at all. 8. Mecklenburg County, North Carolina. Mecklenburg County, Charlotte and its suburbs, is North Carolina's cash cow. Once dubbed the Wall Street of the South, it drew bankers, workers, and insurers alike. Insurers liked Mecklenburg for its booming population and mild weather. But now dark clouds are gathering. Non-renewal notices have spiked here too. Both Mecklenburg and Wake counties are in the top 5 of North Carolina's trouble spots. Essentially, carriers are pulling back on large suburban markets. Experts warn that higher claim frequencies, driven by inland flooding and occasional hurricanes, are to blame. Locals who used to feel invincible are watching neighbors lose coverage. The result is a strange dichotomy. A modern city with cutting-edge skyscrapers, yet an insurance market retreating into the shadows. If carriers continue to hesitate here, it won't just be small towns left exposed. The state's biggest finance hub could be next in line for a quiet collapse. 7. Hancock County, Mississippi. On the Gulf Coast, Hancock County bounced back beautifully from Hurricane Katrina 2 decades ago, rebuilding homes with help from federal grants. But resilience has its limits. Insurance has become the lingering disaster here. Major insurers like Allstate and Progressive have simply stopped writing wind and hail policies on the Mississippi coast. In towns such as Bay Street, Lewis, and Kiln, houses that once cost $250,000 can suddenly carry $5,000 to $6,000 annual insurance bills. Imagine a blue-collar family living in the same home for generations, now unable to afford the windstorm policy that once cost a fraction. A local agent says it's tough for folks who lived here their entire life. The cost of living was so cheap, but the continually rising insurance costs could really hinder the community. In practical terms, banks are now limiting mortgages or forcing buyers into expensive state-backed plans. Hancock County's plight shows that even moderate sea level rise and storm frequency can erode an insurance market fast, turning a place that rebuilt from ruin into a no-man's land for carriers. 6. Broward County, Florida's Sun and Surf built Broward County's paradise. Think Fort Lauderdale, ocean views, and endless retirees. For years, insurers considered South Florida a steady bet. Warm weather, heavy construction, no snowfall. Those days are over. Florida's home insurance market is in free fall and Broward is ground zero. 16 major storms since 2020 have pummeled the state, contributing to $200 billion in losses. In turn, Florida's average home insurance premium has surged to 4 times the national average, now topping $11,700 a year. Even if you can pay, you might not be able to get a policy. 1 in 6 homeowners across Florida have no coverage at all, either because prices are too steep or carriers simply won't insure rebuilt coastal areas. Broward residents are learning this the hard way. Agents report carriers quietly reducing exposure, leaving new buyers with only the Florida Market Assistance Plan or no insurance. The human cost is mounting. Retirees on fixed incomes now face the nightmare of being trapped in a high-risk zone with no safety net. 5. Orleans Parish, Louisiana. New Orleans, a city of music and melting pots, is also built on one of America's highest-risk foundations. Decades ago, Lake Pontchartrain seemed so far away. Today, insurers see it looming over the city. A congressional investigation confirms what locals already knew. Louisiana's private home insurance market has collapsed under repeated storms. Nearly 20 companies pulled out of the Louisiana market in just the past 2 years. In New Orleans and its suburbs, neighborhoods once buzzing with Mardi Gras celebrations are confronting blank spaces on insurance maps. Premiums have skyrocketed, while options have dwindled. Homeowners who rebuild after hurricanes are often forced into the unpopular wind pool or left completely uninsurable. The dominoes fell quietly. Today, the Big Easy's residents whisper worries about tomorrow's policy renewals. Insurance was supposed to be the ultimate protection. Now in Orleans Parish, it feels as precarious as a flood wall in a Category 5. Number 4. Sonoma County, California. Across the country, America's wine country is singing a different tune. Take Sonoma County's rustic neighborhoods with redwood forests and rolling hills, once a magnet for retirees and winemakers. Insurers loved the low crime and wealth until wildfires changed everything. In a rural enclave on the Russian River called Rio Nido, more than 25% of home insurance policies were non-renewed in 2023. One 79-year-old widow who never missed a payment found herself dropped by State Farm, left scrambling for a new policy while a wildfire threatened the next town over. And Sonoma's plight isn't unique. Many of California's largest insurers, State Farm, Allstate, Farmers, and more, have dropped out or restricted writing new policies statewide. Residents now pack their belongings on evacuation routes, often to the sound of voicemail greetings. "We're sorry, we have no available coverage." For years, California's coastal forests were just scenic backdrops. Now they're warning signs of a market uninsurable by private means. 3. Maricopa County, Arizona. Arizona's desert diamond, Maricopa County, Phoenix, and suburbs had seemed safe from both hurricanes and wildfires, at least compared to California. But risk is catching up fast. Rising heat and drought have fueled more aggressive wildfires even here, and insurers are taking notice. One Arizona homeowner says she was rejected by 22 insurers before scraping together a policy that only covers half the value of her home. Statewide, homeowner premiums jumped 9% from 2018 to 2021, and experts warn that rapid growth in high-risk zones means catastrophe exposure is brewing. The state's own fire chiefs are sounding the alarm. We're not just talking about Show Low and Flagstaff, we're talking right here in the Phoenix metro as well. One native remarked grimly, "It makes sense that companies are abandoning parts of California. Shortly, it'll be Arizona, where they just don't want to do business here anymore." In other words, Maricopa County could be next on the list, where insurers once saw safe suburbs, now only wildfire danger looms. 2. Los Angeles County, California. In coastal Southern California, Los Angeles County was the crown jewel. Endless riches, pleasant climate, a global brand. Insurance companies flocked to Pacific Palisades, Bel Air, and the foothills until the worst firestorm in LA history arrived. In late 2024, insurers began refusing to renew policies for thousands of hillside homeowners in advance of the fire siege. State Farm alone told 1,626 Pacific Palisades policyholders not to bother renewing. The logic was chillingly simple. Catastrophic wildfire losses were coming and they didn't want to pay. Then the firestorm hit. More than 10,000 homes burned, 16 people perished, and neighborhoods vanished into ash. Suddenly, those rejected homeowners found themselves with nothing but charred mailboxes. The insurer's retreat had been quiet, but the lesson was deafening. In LA County, no amount of wealth or celebrity status could guarantee a policy. The infrastructure to rebuild insurance payouts simply wasn't there. 1. Butte County, California. Our most chilling case is Butte County, Paradise and Cohasset, Northern California's poster for wildfire devastation. This was where one couple's American dream died twice. In 2018, Michael and Christy escaped Paradise's campfire with only their lives. They rebuilt elsewhere and thought they were safe. But this summer, lightning set off the new park fire, and their brand new home went up in flames. The tragedy? By then, no insurance company would cover them. They had been dropped out of the market altogether. The Los Angeles Times explains, insurers have increasingly dropped customers or stopped writing new policies in some areas, forcing residents to seek the costly FAIR plan or go without coverage and jeopardize the assets they've spent their lives building. Michael put it best, "We had never intended on living in a house without insurance, especially given how important it was. Now we are left with nothing." They lost their savings, their home, and the last fallback of faith in the system. If Paradise's experience tells us anything, it is this: when insurers abandon an area, entire communities are left vulnerable even after surviving the unthinkable once. These 10 counties are not just entries on a map, they are warning signs flashing red across America. From Iowa cornfields to California redwoods, from Louisiana swamps to Arizona deserts, insurance companies are quietly pulling back. What started as whispers in boardrooms has become a national scramble. If our countdown shows one thing, it is that no community is too prosperous or remote to escape this trend. And as Mr. Deno of Cohasset realized, being alive won't be enough to protect you if you have nowhere to rebuild. We'll keep watching this crisis unfold so you can stay prepared.